Hey guys, come check out episode 22. We bring Igor back in the studio for part 2 of commercial financing. Chandler looks at some yachts in the Metaverse, and I'm back in the news again.
When I was broke, I had rich habits. When I was broke, I had rich habits.
All right. We're back. Master Keys, episode 22.
Episode 22.
Chandler Haliburton here.
Neal and Andreino.
Igor Geshelin.
We're back with our boy, the Rainmaker. I think I called him in a previous episode. I got a lot of
I'll
positive.
I'll take it.
A lot of good feedback on that nickname.
Igor part 2. Igor was on previously in episode ? And did a part 1 on financing, some structures. We talked mostly about residential stuff, I believe.
I think we covered a lot of ground.
Yeah.
Mainly starting with the residential stuff because I think at that point in time we were going over a few things about what you should do if you're thinking about buying, steps towards buying as a first time. You guys can kind of scroll through the past episodes and come across that. Igor, I think, was the episode either before or after. A lot of people had good questions coming out of that, so we figured we'd want to do a part 2, but also talk a little bit about commercial, and then I'll just also bring you in because you're also an investor. You're someone who kind of works in this space at a few different levels, so lots to talk about today. But as usual, Neal's got news. / Neal is in the news.
the weekly the weekly update. So right off the hop, I'll talk about the 19 unit that you guys have all heard about 50 times.
Yeah.
My closing was supposed to be this week. Due to some lender issues, it's been bumped to next week, but I am assured that we're closing next week. So seller wasn't super pumped about that.
No.
I'm going to go ahead and just air this. I think it was a little weird, but the seller had an out-of-town property manager that they flew in for the closing, which I thought was very
That's
weird.
unusual.
Yeah.
But the seller was local?
Seller's local, building's local, there's a superintendent on site, but the property manager's from Ontario.
Every now and again, I kind of rag on property managers not doing a lot and
Right, but
charging a
what
whole
do
bunch.
you
And
doing
then
if you're
I'm out of
somewhere else?
province.
Yeah. So I was like, what is this guy doing?
Weird.
Because they also pay for a super on site.
And who paid for that flight?
Yeah, I had a pony up for all of it now because I had delay
What?
closing. Oh yeah, yeah. I paid for flight here, back, food.
For the property manager of the building that you're buying?
Yeah, I probably shouldn't get into all the details, but don't delay closing if you don't have to. And so I had to, but it was a good little battle to get that 1 week extension.
What was the property manager supposedly here to be doing?
From what I could gather, making sure that the building didn't grow legs and run away,
I think what's also neat is
which
that
it didn't do.
it was probably
good.
just like his boy and they wanted to come in and party, so they just got you to fly him in.
Well, legitimately too, because the other thing was he's flying here and he's driving back, and I was like, did he just assume a vehicle? I'm like, okay.
Is he going to send you his gas
This is
receipts?
Yes. I'm doing.
Actually?
I'm paying CRA kilometers, so I'm actually paying $1,300 to drive him home. And then I sent back. I was like, hey, I just looked it up. There's 54 flights to Toronto next week for $208. I'll gladly book it for him, and I won't pay. I won't charge travel agency fees. And
Yeah,
they're
I was like, I like the drive.
and they're like, he has to drive, and I'm like, you mean he came here to pick something up?
Yeah,
Right?
yeah.
And now
he
he's driving.
He bought a car.
He bought a car.
He bought a car and he's driving it back.
Yeah, and so I'm paying for his food too. And I'm just like, okay, this is just like a spit in the face. The next thing that happened, and the reason I was in the
Leave it in.
news this week was I had a hot water tank blow up at one of our properties, and it fed, I think it feeds about 3 or 4 units, because the rest now have their own hot water tanks. And anyway, so it blew up on a Friday or a Saturday. We did an emergency call out to get it looked at. It was an old oil tank.
An oil-fired hot water tank, yeah.
An oil-fired hot water tank. We weren't able to replace it with that because then we had to do a bunch of other stuff to kind of get it up to code, and it didn't make any sense. So to do a better setup, we were going to do an electric tank. They didn't have one because they needed a bigger than standard residential one. Anyways, long story short, we worked on getting like an electrician out there and a plumber in time. It ended up being, I think, Monday that they did it.
Yeah.
In that same utility space, there was a washer dryer setup. They had to steal the dryer feed to power the hot water.
Mm-hmm.
So obviously I was like, I think the hot water is a little more important than your coin op dryer. Mm-hmm. So that got done. But now they don't have a dryer for a temp amount of time because we're going to reset up a new feed to do the dryer. Anyways, in the meantime, one of our tenants decided to take it to Reddit. And
Good.
I love this guy.
yeah, this guy's done this a few times to me before. Anyways, he twisted it in kind of a way that it's like I don't know. He words it very strongly, and the internet's very quick to support on these kinds of things. And then it kind of went to the point of someone being like, name this person. And so then
Yep.
he responded by putting my name, linking all of my real estate pages, and he linked something else too. I think the property management. Anyways, so we put that on there, and then people just proceeded to absolutely berate me online, which is the part that I'm kind of surprised about. It's like people don't live in the building; they're getting only one side of the story, but then they're super quick to like make comments as far as I hope this guy crashes his car and dies.
Wow.
And I'm not making
That's
this up.
that's a quote.
That's a quote unquote. Someone said on there, I hope he crashes his car and dies because they don't have a coin op dryer for maybe a week.
Yeah, and when you said strong language, like the Reddit subheading or whatever it is, I'm tired of Halifax slumlords, which obviously is going to get a bunch of people engaged.
That's right.
Right? Like that's a hot topic. People are going to go in there. And then he's like, I told him for months the hot water tank was leaking and then it blows and he doesn't replace it for 3 days. And then he replaced it with a 40-gallon, even though we have 6 units here. So I really look forward to scheduling my showers around, the other people in the building. And we've had to disconnect the dryer. So we just left the cord hanging there. And there's always, always, always more to these stories. And a couple things check out, like, obviously, you would replace it with an electric unit because you're taking out the oil boiler.
Yeah.
So you have to get an electric unit. If you've tried to replace an electric hot water tank right now, they are legitimately in low supply. Just like you can barely get breaker boxes.
Both
and
are in
panels.
low
Or,
supply.
You can't get
panels or appliances or
you
anything,
can't get
right?
anything. So if it broke on a Friday, yeah, good luck trying to get that before Monday. Does it
Get
suck?
a trades guy.
Yeah, absolutely. It sucks, but that is not surprising in its own right. And obviously, you'd put an electric unit, not an oil one, because the furnace and the oil combustible source is being ripped out. Now, trying to run a 220, if you have to run a 220 off an existing host meter and it happens to be fuses, which it probably is, or something like that,
Yep.
it is not that straightforward to run a new 220 line. So a dryer takes a 220 as well, probably BX cable. So you just turn it around and run it in there. And then, yes, the dryer is going to be out of commission for 3 days. And someone commented today on one of our things, it's like, because we made a comment that had the words real money, and someone was like, yeah, real money, just like the real money I put into your dryer that doesn't work. It's like, like you want the two loonies back, like, trying to get, anyway. And that size hot water tank is plenty for 3 units.
That's the thing. The plumber put in a tank. They knew what the usage was, and they're like, I think there's 3 units on it.
Yeah.
And they said this is a big enough tank for it. Like the plumber put in what was required, because also the cost between like the sizes of tanks is like marginal.
Oh, it's like $100.
Yeah, exactly.
Yeah, 40
it's
to
irrelevant.
60, it's not anything.
So he would have just done whatever fit the usage. And then another additional weird one is because they linked all of my stuff online, people, again, who don't live in the building, have nothing to do with it, have also taken it upon themselves to text message me.
Right, yeah.
So I'm waking up to text messages from random phone numbers being like,
and at first
hey,
you're super excited.
Right.
And then you read the text. Oh.
Yeah. At first I'm like, oh,
What a roller
what came in
coaster.
overnight. And then I open it and I'm like, really? Like
Yeah.
random people feel the need to like text me and say like weird offside stuff because that helps the situation. I don't really know.
This is
But-
the challenge too with like, there's obviously a lot of history there. This is the guy who went to the news previously.
Yeah.
And so there's history there. He's had success with a viral Reddit campaign before.
True.
So he's just going to go over that same trodden path. And, but doxing people and putting their info out there, that's a little bit suspect because you shouldn't be getting, people. I joked before we started that I want to do a segment called like mean tweets and just read out the stuff people say. Pretty good content. But
We're getting there now.
And it's not like you're trying to hide or hide your information, but like how is it relevant for it to be publicly available to people who have nothing to do with the situation?
yeah.
Yeah, exactly. And it's not like him and I had a conversation or anything like that.
Right.
So
It's just super weird to be a grown adult, go online and see other people's business and be like, yeah, me too. I'm going to get in on this with this person I don't know. Like, that's weird, man. If you're a grown adult doing that, you're a weirdo.
the other thing I'll point out too, just since we're just going off on this person in some sense, is he also during showings for other units has the windows open with the music blaring, like rap music, and he got a "Beware of Dog" sign put on the front of his unit, like just trying to create the tone that it's bad
I'd be like,
there.
sweet. Rap
Right.
music and dog friendly. I'm into this place. Let's go. All right. Well, what else is new with you? So you're making friends all over
I'm making
town.
friends all over town between the purchases and my tenants. The tenants that I have seem to like it though, and they keep on moving into the new buildings, so that's great. But other than that, just a bunch of refinancing. I'm trying to get everything cleaned up and refinance across the board. I've screamed a few times that things are going to change. I'm still a big, strong believer. I don't know exactly what's going to happen and where to be putting your money, but I want to have some cash in hand so that if there's an opportunity available, I can make a play on that. And I'm also looking at some crypto options. I think you guys are as well. That I probably want to get involved in because I think there's some big changes coming also on that front.
Well, there's this little reset that's maybe going on in the market right now, same as when this all started. And we've talked about this before. I remember thinking to myself, like, man, for people who have a bunch of liquid cash right now, this is the time. I even thought, like, I've always wanted to have a restaurant. Now would be a great time to buy a restaurant because they were closed for a while and stuff, you know. And this little pullback that's happened, you know, in the crypto space, it's been pretty significant the last month or so. But we could have another little dip that we had before, and we all saw what the result was coming out of that. So interesting times.
I saw a funny little video online or meme or TikTok, and it was like your Black Friday sale, and it just showed like a picture of like Walmart and people like beating each other with a TV, and then it like flipped to his, and it had like all the crypto and all the stocks up, and everything was red.
Right.
And he was like, Black Friday sale, like everything's discounted like crazy.
Yeah.
Now's a great time to get in.
Well, we haven't talked a lot about COVID because it's just kind of like this undercurrent to everything. But there's obviously new ramifications, you know, active with this variant. But also, you know, we're going to talk about a few things today in the news about those CERB payments are coming due. People are about to pay income tax on some of this stuff. A lot of the mortgage relief down in the States is now over. So we'll talk about that a little bit in the news.
Yeah.
And what's new with me? Thanks for asking, Neil.
I was.
That's why I took over that eight unit that we talked a little bit about. There was a video on our social media there. And thanks for Igor for helping out with that. Not only with the purchase of that, but also the refinance that led to the purchase of all that. So I did the old meet and greet. I don't know how you handle it. That was my BlackBerry beeping. You know, I go there with my little letter, and then I go there and I visit and I try to get contact information. So I'm going through all of that, which, you know, full disclosure with them, I'm saying, hey, you know, the building's going to be renovated over the next period of time. I want to work with you guys, compensate you, help you with your move. So we're working through that. And what else is going on?
Well, did you no? So
How did that go over?
yeah, so how did that go over? And also, did you not find an empty unit? Which is like, again, like this is the bonus of being a landlord. Yeah, you get an empty unit, which you can re-rent it, but so now you just lost whatever $1,000 over that month, right? Like,
First of all, it was like $500.
it was only $500.
It was $500. It was $500, heat and water included. And I walked in, and the thermostat was broken, so it was reading like the thermostat was off the measure. Like the only part of the thermostat that still worked was the part that told you the temperature currently, and it was over
35 degrees.
Wow.
Yeah. So literally that unit at $500, probably another 3 days, and it would be in the red anyway.
Yeah.
Right. So I'm just going to go in there, disconnect the thermostat, like turn it off, or figure out something to do there.
True
But,
enough.
you know, in order to compensate them for moving out, it would have been quite expensive. So the fact that unit was vacant,
It's a bonus.
Representative on the other side was like, hey, just so you know, the person just up and left in this unit. I'm like, that is literally the best news I've heard in a long time. So we're going to go in there and demo that one out. But in terms of reaction, I mean, people aren't happy about it. No one likes change. And as much as maybe we draw the ire of some people, like we are sensitive to the fact of what's going on in the market, I understand that these people are not going to be able to go out there and find other $535 heat included units.
Yeah.
They're just not. And they realize that too. I've just kind of started the conversations with them of, you know, I'm going to work with you on timelines as long as we both understand that this is imminent. Like it's not a question of if, it's just a matter of when.
Yeah.
But I'm easy to work with that if we agree on a when and work towards it. Not only can we do that, and you can kind of go out there and start looking and get like, you know, take a good place when it comes along or what have you. But also I'm going to work with them with the compensation in the form of, you know, months of rent and help moving and all that sort of stuff. So people are
Standard.
generally receptive to that, though it's not great news. But we'll work through it. And I'm super excited about it. Like I like the idea of having a project, even though it's probably more work and more money than I should have spent on it and all those good things, but whatever. And actually this was really exciting news. I booked the Siteworks guy for Portland Street starting in January. Boom. They're going to
Start digging? Shovels in the ground?
Digging a big hole.
That's super exciting.
It is
That's
super exciting.
That's been a long time coming. When did you first get that site?
Well, it's kind of gradual, right?
Yeah, I guess you picked them up over time.
No,
but
no,
when you
this
bite-
first one where this is, that would have been, man, it's been 2.5 years since the DA. Oh my gosh, it's coming up on
4 years.
over 2.5 years since I submitted the DA. And I think I had the property for about a year before that. So we're coming up on 3.5, 4 years before the hole gets dug, and then it'll be 2 years to build it, or 18 months anyway.
That's insane. That's why, like, yeah,
It
when
is insane. It
this
makes me
reactive
sick.
thing to like we need housing, it's you got to start ASAP, and we should have been doing stuff like
Yeah. And the other day I was
Years
like, I
back.
wonder how much money I put into it so far. And I kind of was going through my whole thing. I'm like, all right. And I'm right around 280 for architecture and permits and planning, plus another 80 plus one. I don't know, like around 500,
not including the actual land.
not including the land. No, that's
Right.
just out of pocket expenses.
And
over
you
the
haven't
last-
dug a hole yet.
Haven't dug a hole. Haven't moved a grain of dirt.
Things
Yeah.
are going well.
But no, it is super exciting. So I'm pumped on that.
That's
But,
awesome.
And one other thing that happened this week was kind of a bummer. Like lost a deal on a really good property. You and I were actually talking about it before. We won't go into too much of the details, but
Yeah,
just with like rates creeping up just that little bit, and the market being so hot that some of these deals are razor thin margins.
a lot of them are razor thin margins.
And you and I take product that's heavily dilapidated and it has the lift at the end, and the end product is worth the sweat, and you maybe pay a premium based on the cash flow up front, but you can see the end model. The challenge is if you want something turnkey, man, the price you have to pay.
It's insane. I don't know how you're going to make money out of it.
Well, the problem is like you kind of don't, and you either have to resign yourself to like this is just a place I'm going to park money, and there's
what it
advantages to
is.
parking money for all kinds of different things and what people are doing in their financial back end. But if you're a young person, it's either you've got to really take on a massive project, or it's hard to cash flow on it.
You need to have a ton of cash, or you need to be able to take on a big project. And so for most people, you really have to look at taking on that project. Because I do also, like you're saying, I have some young people that want to buy a rental, but they're not interested in getting into the full like meal deal gut job.
Yeah.
But like you're saying, it's impossible to buy something and then rent it and cover your expenses. And so
Yeah.
if you're then having to contribute to it on a monthly basis when things are already maybe tight or you're trying to grow, that's not always the most exciting opportunity.
Or the return part is not enough, right? Like,
Yeah.
Given the price point of that one, because I know what that one was, how much you have to put down, and
Yeah.
then if you're
Yeah.
only making like a little bit per month, that justifiably isn't the most exciting thing, right?
Yeah, I mean,
And,
yeah.
And the other thing too, that's I think worth noting, that's interesting here, like our the loan amount wasn't small,
Nope.
so the mortgage payment is not going to be small, right?
Yeah.
But then like the property taxes, like
They're going to spike even once you buy it.
our
Yep.
taxes here, like look at say Toronto, right? I know we'll talk a bit about taxes too, but property taxes in Toronto relative to the price of the property,
Yeah.
to have like say $1 million property there, which is not anything exciting there.
Yeah.
But the taxes on it are like $4,000 a year.
Yeah.
So
It's
so
crazy.
proportionate,
It's like 10
right?
here.
10,000, like 1% roughly, right? So that on a monthly basis, that hurts,
Yeah.
So
And that's a product of two things. One, they build up. We refuse to build up here. Like you pop one of these condos up, right? Every single unit there gets full freight taxed.
That square foot of land
Yeah,
will be
yeah.
producing
Right.
more tax than it would be with the low rise.
Exactly.
Yeah.
And then there's just the fact that the pricing got up so high that the municipality, lowered their
they-
tax rate, which
right.
we
Whereas
don't
here
do
they just want their piece.
yeah.
And I think that's a good segue into the news.
Yeah, let's segue into the news. Neil, you kick us off.
Well, I mean, I'm going to go on that topic of tax.
Yep.
And the first item being, and I think you looked into it a bit more than I did. Everyone knows we kind of went off last time that HRM proposed was it 7% increase or 6% increase?
5.9.
5.9%, so 6%, half being a climate action tax and the other being just due to inflationary pressures on property taxes, even though their assessments across the board have gone up more than they ever have, higher than they ever have, and they had a massive detransfer tax windfall that they've also never had before. And they've had that now for 2 or 3 years.
And wouldn't have budgeted for.
Exactly, and would not have
Right?
budgeted for, and they openly
Found
say it,
money,
that
found money.
It's newfound money, and like it blew everything out of the water. And in response, they're going to have a larger than ever property tax increase. But now on the flip side, New Brunswick's also facing a lot of growth, similar to Halifax.
Yeah, Moncton specifically, and this
Yeah.
is where this is the municipality in question. They've realized that they're going to have just over a 10% increase in property assessment.
yeah, which
So-
would be similar to here.
Yeah, so
If not less.
It's less than here.
Yeah.
So what they did is they dropped their property tax by 6%.
To encourage growth.
Not only to encourage growth, but just to be like, we have more money than we
Right.
did
They have
before.
a budget. They're going to meet it.
And given
That's it.
everything
Yeah.
that's going on, maybe collecting every single penny that we can is not what we want to be doing. So they dropped their property tax rate by 6%. Now, anyone in council who's listening to this, which no one is, though Mike Savage was in here right before here, because he's got, check out the Mic Drop. He's got a podcast here as well at PNV.
I like the name.
It is a sick name. They're going to say but our property tax rate is technically lower than Moncton's, because Moncton's now is going to be about 1.56. But those rates move inversely with property values.
Yeah.
Right. So they are lowering their tax
It's
rate.
also
as
an
their assessments
irrelevant
go up.
point. One thing went up, the other can come down.
Yeah. Two
They
things
don't
can be
need
true.
to
Yeah.
both go up.
Well,
Yeah.
both
Right.
going up is double counting.
Right, but that's the thing. I'd love to see that stat, like the average assessment increase, and then look at that new assessment and then the new tax rate on that. So that actual tax increase to the average person is not 5.9%.
Yeah, it's greater than
Right?
that. Yeah,
It's much
It's
greater.
double counted.
So
Yeah, and this is like Moncton's doing well, man. I know, like
Yeah.
we hear this all the time. Every now and again, I'll have someone like kind of
Debating
peripheral, and they're
between
like,
here
"Oh
and
yeah,
there."
I'm looking
Yeah.
in Moncton," and I know some guys who like sold everything here and then bought a bunch of stuff in Moncton. I know you do things across the border, like
Yeah.
so good on Moncton. It's great for the general area, like the Atlantic provinces, to have Moncton be strong. But what a nice little piece of news and a big contrast. Like that
Yeah.
is a shot over the bow. Like if like these municipalities, they go to these conferences and they go to these big corporations to pitch, right?
Yeah.
Why come here? That's a
Yeah.
shot over the bow of anyone looking to invest in either Moncton or Halifax. Property tax goes up over here 6%, goes down.
One of the
6%.
biggest complaints too for investors in Moncton has been the tax rates. So
But
and
that-
they're trying to show it. They're trying to make the change.
there is something different though in New Brunswick. There's an absentee tax. It's like as soon as you leave the province,
Oh yeah.
your tax rate goes up. It's like triple. Like it's something wild.
Oh, cool.
Okay.
So say you have a house there and then you move to Halifax and you rent your house out, your tax rate goes up like exponentially.
No way.
Okay, now that you said that, now we're gonna get a new HRM proposed tax.
Yeah.
Oh, like we can do
Yeah,
what?
absentee tax. So
Yeah.
While you were on vacation, we prorated it for 7 days.
That's right.
That your tax rate is actually 3.5%.
yeah.
In terms of other things that are going on in the municipality, we talked a little bit about the affordable housing temporary units that, full disclosure from council, they're saying they're probably going to be there for about 3 years.
Yeah.
Going down on Alderney. That site, for anyone who was kind of listening before, it's a little further north than I initially thought. It's
the far parking lot.
It's the far parking lot.
Yeah.
I mean, it's still highly valuable
On
real
Alderney?
estate. Yeah.
It's right in the thick of things still, but
and
it's a little further over.
In general, Alderney Landing and Alderney Gate are really undercapitalized from a real estate perspective either way, but that's where they're going. And that feeds an immediate need like we talked about. And then they announced the location over in Halifax, which is the parking lot of Centennial Arena. They're going to build them kind of on the periphery of that parking lot. I think they have the same timeline, like thinking end of
Similar
December. They're
timeline.
gonna
Yeah,
have them built.
exactly. They're looking to house 38 people there. They're also going to have a couple other units that provide like medical services and
That's the key to everything.
yeah.
You build these and I mean,
They're going to have on-site staff, which is going to be really, really important.
100%. Like this is this building that I just took over. There's some people there that have serious health issues, be it mental health, or health, and it's like, oh my gosh, like you should not be here.
Yeah, a lot of these
Like
people aren't
the-
there
the-
by their own doing, and there's
Oh my-
assistance that's required to
You
help
know,
them.
If we're really trying to correct the problem, you need to build these institutions where people have this full support around them.
Yeah.
Mental health, physical health, financing support, all of these things built in one facility, not this patchwork solution that we have. And nothing that's coming down the pipeline is actually addressing that, but beating that horse quite a bit.
Before we go any further on that, though, I just want to say I like that site, I think, a little more.
Right.
Like I found, like you said, Alderney is a bit of it right in the middle of things.
Mm-hmm.
The downtown waterfront for Dartmouth is a little smaller and a little bit more.
It generates tax revenue. That's the thing. It's not like,
Yeah.
it's visible here. Like, it's not that. It's just, oh my gosh, that land could generate a lot of money that could go towards funding more things. So is that
Yeah.
the ideal spot? No, but they were in a bind. We talked about that in a previous episode.
Versus the Centennial site, I think location-wise, it's central to everything. It's really nice in that sense. And then it's still not impacting other things negatively. The only thing is I think there's a little dog park there But
Yeah,
really, the
it's-
dog park's still available,
I
and
think that's a small price to pay.
exactly,
probably.
exactly. And like, it's not going to be that bad overall.
Well, it
long as they
also
maintain these things, like I said before.
It's spillover winter parking for a lot of people on Maynard and Creighton and Bauer that don't have driveways for winter parking yet. It's just an interesting thing. It's like, okay, so there's going to have to be a spillover spot for those people to park. But again, all things that can be worked out. These are imperfect solutions
Yeah, I
to
mean,
a
they
big problem.
have to put it somewhere.
Yeah,
and
yeah.
Someone will be inconvenienced, so
Yeah, exactly. It's never going to be a perfect solution, but I think they did a pretty good job on the Halifax side, and even Dartmouth as well. But
Now, switching municipalities, Toronto first.
yeah, let's talk about Toronto for a second here. So we're all kind of losing our minds in Atlantic Canada because prices have gone up, 20% year over year, 2-3 years in a row now. In Toronto, very close to downtown on Danforth, they listed a 30 centimeter wide parcel of land, 30 centimeters. So that's like 12 inches. That's a foot. 50K, which is not
49,900.
49,900 exactly. It's all about the marketing. Multiple offers. I looked it up. It's like just the in between of two buildings, really.
Yeah.
And I don't.
I love that someone owns this independently. Like,
I wonder if it's one
There's
of
a
the,
bunch of that in Toronto.
yeah.
I've seen this happen before where these guys bid on an auction site and it was a foot of land between the two driveways. But the picture on the auction site showed the house. So they thought they were bidding on the house. So they bid like 80K, thought they got this house in like TO or wherever it was.
And they got to beat a strip.
And they were so super pumped. Show up and they got the actual like that strip of grass between your house and your neighbor's house.
crazy.
Yeah, and it didn't even go all the way back.
right.
It
Yeah.
was just the length of the driveway.
Yeah. So what do you do with this asset? Like, what's the point?
I don't know. I think for these guys, it just becomes it's definitely gonna be one of the property owners. It's got to be one on either
Yeah,
side. There's
I would
nobody who's
think,
like
but there are
the
three
foot in
bids.
between.
There are 3 bids. So like,
So who's the third person?
Some jerk's just like bidding them up a little bit. He's like, one day they're gonna go to develop this and they're gonna need these 30 centimeters.
that's you say
That's
that in
true.
jest, but that's a good point. Like at some point, someone's going to buy both of the ones on either side.
Yeah.
And they're like, I need this strip in the middle.
Yeah.
you know?
Or the third guy who could sell it back to the other person who didn't get it of the two actual owners
Yeah.
for a premium.
just turn it up another 5-10K.
Reassign it.
Yeah, reassign it over for an extra 50. But yeah, anyways, that was a really weird one. My bigger thing is, how does that happen? Like, how do they allow subdivision to take place?
Right.
And they're just like,
Why does that?
yeah,
strip
we're going to
exist?
subdivide these two lots, and then there's just like this 2 inches in between here. We're just going to leave that as a separate bid. Someone's going to pay tax on that.
It does happen because you used to have all of these.
Right.
I mean,
So who was the seller?
yeah, I know.
Right.
Now I didn't go that far into it. I should have looked.
And like, why did he wait this long?
Right.
He's
Why
like,
now?
Oh, market's
Why
up.
now?
So, occasionally you'll see this because here we've got, pre-amalgamation and post-amalgamation. So like, Dartmouth used to have its own water supply, right? And that was different from Halifax water. That was different, presumably, from Bedford water. And so they would have these weird little easements. And then over time, it's like, well, we amalgamated, so all the services got jammed together. And in some cases, like we had these weird pieces of land that was given to the homeowners on either side, or just forgotten about, or people divide things over many times and like, oh, well, I need this little strip to access my house back in the back, and someone buys everything, but they forget to migrate and transfer that one little strip. So then you get these lots that aren't identified. They've got no owner, and all these things can happen. But 30 centimeters is small.
It seemed a little nuts, but I mean,
but the diameter is good.
anyways, transitioning now, since we're just moving our way further and further away, we're gonna go straight from Toronto just to the metaverse. We're just gonna go ahead and skip from this universe to the
Yeah.
next universe for another sale that was mind blowing. Just because we've been talking about the metaverse a fair bit recently in Sandbox, which we've talked about before as being one of the, I guess, universes within the metaverse. A yacht sold in Sandbox for $908,000, and it sold to someone that we know, Republic Realm.
Oh, the same people who bought that development site.
Exactly. They are on a tear. And the yacht is docked at Fantasy Marina, which I thought was a fitting name. But yeah, this is the most expensive NFT to have sold within the Sandbox platform. I don't know what their objective is with it. I don't know if they're going to just flex on people. I think that's kind of what yachts do.
Yeah, they're just going to host sick parties.
I don't know if they're going to have sick
Yeah, but
parties.
how do you use that online?
Yeah.
Yeah. So, anyways, I'd be curious to see what they're doing with that. On a flip side, just to put it in perspective too, Sandbox, $122 million of Sandbox land traded this week.
Crazy. Man, I know we joked about this
$122
more, but
this
like,
week.
What's the point of going to this fantasy world if you can't even have a yacht in the fantasy world? You know what I mean? Like, that defeats the purpose. If your life sucks in the metaverse just as bad as it does in the real world, you know.
I was going to say,
why would you go there?
apparently I'm not going to have a yacht in real life or in the metaverse anymore.
Yeah.
So
Yeah, it's it seems like but it's so great for publicity. I mean,
But it's real money, right?
It is real money.
It's real money. So it's just interesting. So $122 million and the people or the entities that have that kind of money, like these aren't presumably
that's
dumb
probably
people.
more
Like,
than what's traded in all Halifax
right.
this week. Definitely more than what's
definitely.
traded. Yeah, exactly.
In this
More
week,
than
for
probably
sure.
Atlantic Canada.
yeah.
You know,
Yeah.
so presumably this is smart money and they're doing something that they see a purpose for, and that's pretty wild.
Yeah.
Well, let's return back just for the last little piece of news. This was a specific thing to, I think was it Regina? So what's going on where we're kind of finishing, I mean, I don't know what wave we're on this COVID thing, but a lot of this CERB money, you know, they're starting to come back around and check on it and audit whether or not people were actually, you know, qualified for it. And maybe they applied for it disingenuously, or maybe they applied thinking they qualified and turns out that they didn't. And it was in the news. I can't remember what province it was, but this couple was ordered to repay $12,000 of CERB benefit. And
I think there was a lot given out incorrectly
Which is-
too. Like I
people
heard
were
of
getting-
livestock getting CERB.
Right. And people were getting $2,000 a month, and if they were both taking it, that's only 3 months of CERB that they're being
Yeah.
asked to repay.
yeah.
If it's for both of them.
And you know, they felt that they applied for it correctly, you know, and they'll have to fight that if they don't. But that is going to be a real issue. The other thing is, in the fine print of this stuff, they're like, don't forget to set aside like $328 of each
Taxable
payment
interest.
to put away through taxes. We're coming up to the end of the fiscal year. There's going to be ramifications for all this, and the CERB is the least of it. Down in the States, all of their mortgage relief has just, you know, lapsed. It's now done, and there's something like almost 8 million people in the States that applied for really, like, not just mortgage relief, but mortgage bailouts. And the only saving grace was that the market has done so well that I think there's something like, of those 8 million people, about, you know, 27% of them at one point or another were
Able to get out of their
actively in
house.
arrears, but like still had equity in it.
Right.
And
Yep.
now 3% are advanced into foreclosure, but they're being saved by the fact that the market has kicked up. So they
they have
still have at
actual
least
equity.
20% equity here. But we talked about how rare foreclosures are, but all of these relief programs are now coming to an end, and the payback is not going to be smooth for a lot of people, and there's going to be, you know, big ramifications from all that.
Yeah, with CERB, a lot of people, especially now, who don't have like a salary job, and then a lot of people who are affected by, say, you know, their business being closed, like say they work in a restaurant or they're a massage therapist or, you know, countless other things. We have clients that they took it preemptively, like knowing that they might need it.
Yeah.
Then their year actually ended up okay, and so I know some people who just set it aside, knowing
Prepared to pay it
full
back.
well that they have to
Yeah.
pay the whole thing back because they didn't end up needing it, but they took it because there's a lot of uncertainty, obviously, and so they
Yeah.
thought, hey, I'll have it. If
course.
I pay it back,
Makes
then
sense.
I pay it back.
Yeah.
I think a lot of businesses did that with the 60K,
Totally.
Well,
60K loan, and there was a
10
little bonus on top of
a
that.
little bonus, a quarter of it was forgivable, right?
Yeah.
If you pay back the full amount, you had like
Then
2 years
eventually
to do
With
it.
the
33%.
33%.
Right, exactly. So I mean, that was just
Free money.
a layup. But
Well, think of how many people like took this CERB money, and then, you know, the economy did really well when we did get back to work. There'd be some people that are in a higher tax bracket as well
Right.
than they maybe expected to be, and they've got this money that they didn't pay tax on also. So
Right.
it's going to be
and so those people who set it aside, like that, I heard of some people doing that. We had a couple clients mention they were doing that, but I don't think that's not the rule. Like that's the exception. I think most people
Oh.
just took it and have no idea.
Yeah. People don't set that aside. People don't read the fine print. They're like, okay, sweet, I got this money that helps me through this bind. Great.
People
But
were also
now-
taking it in like a desperate time when they
Yeah.
weren't really.
There were some people who needed it. There were some people who took it just kind of in lieu of working.
Totally. I had this guy
yeah.
who's like, yeah, I can't pay rent because I can't go to work because I don't want to go to work. So if I go to work, I don't qualify for my EI. I'm like, yeah, I mean, it makes sense, I guess. I'm still going to need that rent though.
Yeah.
Like that's a you problem, not a me problem. Anyway, neither here nor there. I know another thing we kind of wanted to touch on, but maybe we'll visit another day. We spoke a little bit about how hard it is to find staff for a lot of positions,
Yeah.
service, frontline, all this stuff. The staffing is way down. A couple things have come out. One, there's over 1,000 people now in Halifax, kind of public sector who are on leave right now because they're not double vaccinated. This was kind of like their cutoff time.
Yeah.
By contrast, in New York, de Blasio just said that it's going to be a requirement not only for the public sector, like government workers, but for private sector as well. You have to be fully vaccinated, 100% of your staff.
I think they're having like a knee-jerk reaction in some sense because they didn't with the first wave of everything going on. It absolutely destroyed New York in a lot of different ways.
Yep.
And now with this Omicron river, I don't even know how to say it, but with that coming out now, I think they're trying to be like proactive in doing it. And like you're saying, they're going after public and private, saying it's mandated, absolutely must have. But they had really impressive stats on their numbers for getting people, like their first dose, they said 80% of... 90% of adults have their first dose, which I thought was insane for like a city like New York. Just the sheer amount of people and like what the logistics would be to get that done.
This has been the first real wave, though, that I've seen a more vocalized pushback from mainstream health, science, and finance voices saying, we already have the systems in place. We don't necessarily need to go full shutdown mode like we did before.
When the objective of the shutdown was to not overflood the systems.
Yeah. So it'll be interesting to see how we handle this wave. Some because of what we've learned, and some because people's own limit of how much more limitations they can take and how much oversight they're feeling comfortable with. And I mean, it's not a good thing to lose 1,000 people from the workforce that are frontline. Over mandatory vax. But it's crazy times, man. Crazy times. I'm over the stuff in a major way. But let's pivot from that. But what I was actually alluding to there is in the States, there's all these interesting things going on with like labor and union stuff, like the Starbucks in Buffalo. There are 3 Starbucks.
Yeah, you had something to say about that. What was this all about?
3 of them have a union vote. Which would be the first Starbucks to successfully form a union, and they'd be part of a larger union. That's going on in Buffalo. And then there's this thing called the strike wave in the U.S. where a lot of people are just not returning to work or striking, and it's being viewed as a real labor revolution of sorts. It just all ties together. You never want to say that someone's hardship is interesting, but these are interesting times worldwide to see what's going on with labor, to see what's going on in the market, the whole crypto world, international trade, inflation. Like you're getting a full, like this will be studied for
go back to
decades to come.
Yeah.
4 episodes back, screaming that something has to change here.
Yeah.
Something's got to give. We can't just keep running like this, where everything, like you have these strikes that are starting, another wave, all that going on. Another layoff, like Better.com is an online mortgage brokerage.
Right.
Their whole objective is to provide mortgages basically with no face-to-face interaction, trying to be that new. They use AI to match you with the right lender, and it's purely transactional, and it's supposed to be easier, cheaper, and smarter. They just laid off 900 people. They did it over Zoom, by the way. Like this is what things are becoming. Like
That was cold-blooded.
Imagine getting a Zoom link invite, and you're like, oh, sweet, like 900 of us got this. Christmas almost here.
A little staff party. What's going on here?
Your bonuses, and 900 people came on. CEO is just like, yeah, we're laying all of you off.
Oh, man, he was ice cold.
2 things that made me a little nervous there is if a mortgage company of that size, who's doing like hundreds of billions of dollars of mortgages, is laying off 900 people. Again, what are they seeing kind of on the forefront? Because even though right now transaction volumes and dollar values are up across North America, but then on the flip side, like also the comfort level to lay people off over a Zoom call like that now. Again, this is just
Before
my
Christmas.
whole thing before Christmas, feeding into this idea of like comfort level of doing everything remotely and no need to be in person.
really, yeah.
You know what I mean?
It's easy to just like do that over a Zoom call.
Yeah.
Yeah.
But anyway, so yeah, both things. That's my freak out about the metaverse. And then also, again, like things got to change. Is there some sort of recession coming down the pipe where, again, a lot of these real estate companies, we saw Zillow made a huge change with their model in the last few months. Another giant mortgage brokerage is now making a change. Are some of these people seeing the writing on the walls where they're doing a lot of transactions and they're seeing what's happening? Even across the board, we're running our transaction volumes down. Yeah, prices are up, but volume's down.
I mean, someone commented on one of our videos, like, actually, it's going to be stagflation. And I'm like, whoever that person is, I love that person because 100% that's what we're steering at, which is like a drop, increased unemployment while prices are also increasing, right? That's stagflation. And that is what we're headed for. And we talk way too much about inflation on this inflation podcast, but it's
But it's very relevant.
It's
back
super
to
relevant.
back to the CERB stuff too. and all the businesses and all the all the relief, like that was just money that came out of thin air,
Yep.
out of the blue very quickly.
Yep.
And so when you have an influx of any one thing, it devalues that thing.
Yeah.
And right now that thing is money. And so that's inflation. Every dollar is worth less. It goes less. Well, it doesn't go as far. That's inflation. So
Yeah.
a lot of that was because all this money just materialized out of thin air.
And typically you expect, all right, unemployment increases, so you get a stop of inflation, like you get some deflation perhaps because people are unemployed. But when your input prices are going up so much, your output prices are up. So this is this big problem.
Interest rates cranking up.
Yeah.
Yeah.
We
Which
need
is
to
a
dive
sign
into
of
some actual
inflation.
mortgage stuff, Igor. We could talk to you about this stuff all day, but
Sure.
we had a lot of people reach out and be like, "Oh, I like that Igor guy. Like, I might want to
That's
talk to him
strange.
and blah blah blah, and get your contact info."
Don't stretch it, Chandler. They were like, Igor was okay.
What do you think? Like, say someone's out there and they're thinking, be it residential, be it small scale rentals or commercial. What should they do before they even call you? Have a job, have some money.
Well, yeah, I mean, have like if you look at a mortgage application for any type of property or product, like you can kind of simplify it to, I always go over income, down payment, and credit, right? Like, you kind of need to meet some criteria in these categories. Now, they're very different criteria whether you're buying your first home versus an apartment building, but like you kind of need to some degree check each of those boxes. Credit, you need to have good credit. It's your report card, as we say, to represent how well you.
What's the bottom end?
Well, it depends again on the type of lender and the deal. Like for a traditional bank to look at a single family home mortgage, 600 is kind of the cutoff low end.
B lender.
B lender, like some of them go into like the high fours, but that's
Neal's asking for a friend.
yeah. But those are tough scenarios and that's not really a part of our business, to be honest.
Yeah.
But like stuff in the fives, like a B lender will do that, no problem.
Okay.
Ideally, 700 and up, 800 and up would be phenomenal.
Now, a lot of people don't know their credit scored. Like, do you put any stock in these ones? Like, submit your credit online. Like,
Very little.
Yeah.
Because we always end up with a different score. We've
Yeah.
never got the same score as someone said they saw on their online banking app. So,
Are they usually kind of close?
they're
Like,
good
rough
at
idea?
representing like if you're in good shape or not. you
Yeah,
know,
okay.
But the score itself, the score itself too, people get too caught up in it, especially when it's a good score. Like if you have a 750 or an 800 or an 850, it honestly doesn't matter anymore.
You're at the top tier anyway,
Yeah,
so
yeah.
it's
There's
irrelevant.
nothing you can get with an
You're not getting
850
denied for
that
any
you
product,
can't with
yeah.
an 800, right? So,
Yeah.
so there's kind of there's a point where it's like, yeah, it's great, good for you.
And your rate doesn't fluctuate based, like with cars, your rate fluctuates based on your credit score.
Yeah, and how the
With-
finance manager feels that day.
and how exactly.
But
Mortgages does not do that.
only like more so for B lending. So
Okay, right.
just I guess to clarify that. So with residential financing, there's A lending, which would be like your banks, your lenders when you have good credit, all of your criteria kind of checks
Your
the
TDs,
boxes.
your CIBCs, your top tiers.
Yeah. And then there's what's been traditionally called B lending. I like alternative lending. I think it sounds a little better.
Yeah.
And that's for people who don't meet the criteria of those traditional banks.
Your credit unions and things like that.
And sometimes
not
that's,
even
yeah.
like credit union would still be an A lender.
Are they?
Actually,
Okay.
yeah. B lending, it's like they have different rules.
Yeah.
Credit union still has the same rules. They're just more flexible with them.
Yeah.
B lending is just like different criteria. So that could be for someone who's newly self-employed. That's tough for the banks to deal with. That's a common one. Or someone who's self-employed and doesn't report much income.
Yeah.
But can truly afford things. Alternative lenders can look at their income very differently. Like
Yeah.
they don't go by tax returns; they do it in a
Right.
different way.
Yeah.
Or it can be because of a credit challenge, right? So there, if you have I don't want to say bad credit, but if you have subpar credit, then the lower your score, the higher of a rate you're getting.
Yeah.
Also, some of the times people have no credit. I mean, somebody like, oh, no, I'm super great. I don't even have a credit card. It's like,
Yeah.
ugh, that's actually not going to help you potentially.
Right, because you need to be able to show that you've managed credit well when you go and apply for a mortgage.
Or new to country.
Yeah.
Well, you may not have credit in our country. Like you
That's
get
a bit
credit
different.
transfers though.
Right. That's a bit
Yeah.
different because you can get, there's new to Canada programs. So if someone's reason for not having credit is because they just got here, banks have specific programs for that. And we do a lot of that business just by, happenstance. So
And you can help a lot with that because I've had a few times where I've had new to Canada and we've gone to just the banks directly
Yep.
without knowing, and every bank handles it differently.
Yeah,
and
big
so we've
time.
been denied by one like standard bank, and then you take that exact same app to another bank and they're totally okay with it because they have a new to Canada program, so they're willing to work with those items.
That's right.
And so I remember we lost this one specifically. We lost a deal on a very nice home, purely not because they couldn't afford it, but they got denied, and we weren't able to get the extension to go to another bank.
This is why you need a broker, because
And
it's
this is where a
it's in the
broker comes into play.
presentation. It's in
Yeah.
the
Well,
presentation.
you
And a broker would know who's going
to approach.
Yes, setting
Right.
up the right line.
Exactly.
Yeah.
But you can get some countries have international credit reports that you can get. We just got one for a mutual client with you from Germany. That was the first time I've ever.
Is that the one that needed to be translated?
Yeah, it had to be
Yeah, yeah.
professionally translated, but we did it all up front. Got it all. And it's approved, right? Good
I
to go.
always try to tell people with all this stuff, like, know yourself. Like, if you're thinking of getting a mortgage and buying a house, take a quick second to assess yourself. Like, all right, do I have some liquid cash?
Yeah.
Am I paying myself, or am I claiming all of my income? And further to that, like this time of year, people have to start thinking about, all right, depending on when my approval happens and how far I go into the new year, are my taxes up to date?
Right.
Like, people need to look at a few of those things maybe before they call you, and you would help them with
But I
all
mean,
that.
calling, I don't know if it's ever too early to call, because we have clients sometimes reach out saying, hey, I want to buy a house a year from now.
Yeah,
and
that's
I
true.
and I want to know what I don't know so that I can prep towards
Get your
that.
ducks in a row.
So like to
Yeah.
this question of what they need to do before calling, I don't know if there's much to do before calling, but maybe have like somewhat of a realistic expectation by knowing yourself. To
Yeah.
your point,
Yeah.
but again, even that, like, people don't know how to create that expectation. So
That's true.
So just
Yeah.
call.
Going back
you
to
know.
the credit thing for a quick sec, I've said this to a few people, and I've heard this before. Like opening a line of credit against your home, even with no intention to use it, that's not a bad. Like, that looks good on your credit, does it not? If you're like, I have $100,000 line of credit against my house, I don't need the money, I'm not using it, but it's open, and then on your credit profile it shows that you were able to kind of basically handle the debt.
Yeah, so there's 2 points there. So with any, whether it's against your home or just a personal line of credit or
Whatever it
credit
may
card,
be. Yeah.
So the 2 biggest driving factors of a credit score are making your payments on time, and everybody knows that. But the second one is proportion of balance to limits. So if you have a credit card with a $5,000 balance, or sorry, limit, and you owe $4,000 on it, you are 80% utilized.
Yeah, it's a bad look.
That's a bad look. The closer to maxed you are, the worse it is.
Yeah. Yep.
If you get those things saying, hey, we've pre-approved you to increase your limit. If you take that limit increase and now you've got a $10,000 limit and a $4,000 balance, it's the same $4,000, but you now owe 40%.
Better look.
And your score will increase.
Your
Right?
card knew me.
Overnight, right?
I remember
So-
talking to you about this early on, because I was like, all right, I got this $5,000 credit card. And I'm like, hey, I've got it like paid off. Should I lower my limit down to $1,500? Because I
Right.
thought that would be me being responsible. And you were kind of like, no, keep the limit at $5,000, but just keep it paid off. I thought, just assumed like, well, let me lower the overall potential balance. But that actually wasn't good for my
No,
credit,
'cause-
which is also how the bank gets you.
Right.
Because they're like, oh, the more credit
Well,
card
So
potentially you have,
then
like,
the trick is not to go and spend the money.
yeah.
But-
Get the card and snip it up kind of deal.
But
Yeah.
what's interesting, so you want those limits to be high actually so that your proportion looks low, right?
So take
But-
the HELOC.
Right. But there are a couple of banks that when they crunch your numbers for your next application, they will look at your HELOC. So HELOC is a home equity line of credit. They will look at your limits on those and calculate your numbers as if you're maxed on them.
Right.
Which is absurd because you owe nothing and might have a
It's
limit of a few
potential
$100,000.
debt, though.
Right. But you haven't used it, right?
Yeah.
So why punish you as if you have? Or then do it on everything. Like those banks won't do it on a credit card.
And you'll see
Right,
that sometimes,
yeah,
like you
right.
say, when you go to buy, I've had this happen where they're like, you need to pay off this credit card, this line of credit, and then close it. I've even had to close one.
Yep.
I think when I took a mortgage from the same company that I had a HELOC with,
Right.
they're like, we'll give you this mortgage, but you have to close the HELOC. Like, we
Right.
need
Or
you
I've
to
had
close
ones
that
that,
line
like,
of credit.
pay it off, and then like you can do whatever you want with it after that.
Yeah,
Like,
that's usually the
That's
approach.
usually, yeah.
But or they'll tell you to close one from a competitor, and then magically they offer you one next week.
Yeah,
right.
yeah,
Like
yeah.
it's just a game.
It's a business at the end of the day.
I love
That's
those
right.
moves. I love those moves.
Yeah.
I got a question for you, because this is a tipping point for a lot of people who listen and a lot of people that we know. When do you have to switch from being, hey, I can go and I can get residential mortgages in my own personal name, to I've got to go down the commercial route?
Right.
Because we've talked a little bit before, like, yeah, you can get into owner-occupied properties for 5% down or 10 or more if they're
Do it a
3
couple
or
times.
more. You know, you can do that a couple times, but eventually you're clearly an investor and you're going to have to put 20% down on these places. How long before you can't do them residentially anymore?
It depends on the bank. So banks have a limit of how many properties they'll let you have, and with some, so it varies quite a bit. So some have a pretty low limit, like 3 properties, 4 properties. Others will say, it's funny, I was looking into this yesterday for a client actually. So some will say we let you have a house and like a personal home and 5 rentals. With some, it's 2 personal homes, like a house and say a cottage, and 5 rentals, for example, right? With some, it's just 5 properties, period. Some don't care how many you have if you're buying a new personal home. But if you want to buy a rental, then it falls under their rental program, and then they have a limit. Some count doors instead of number of properties.
Okay.
So like 16 doors, whether that's 16 condos or 4 fourplexes, right? So it varies.
At the risk of like
Significantly.
oversimplifying, like a lot of them tend to be like around 5.
Yeah, 5-ish.
Yeah. I remember that happened to me, and that's sort of why I
and there's room
incorporated.
and there's room for exception,
Yeah.
right? So like we have clients that we go to a bank whose rule is house plus 5 rentals, and we're doing their 7th rental.
Yeah.
Right. Like a bank has a discretion to make an exception to their own rule.
Yeah, they want to lend you the money.
That's right.
They're in the business of lending. What's the biggest change that takes place though? So let's say 5 for sake of conversation is the limit. Now you want a 6th. I think I actually had someone call maybe a week ago saying that they've hit their personal. What's their next step? Is it like, okay, now I incorporate and I have to prepare myself to do 25% down?
So if you hit that threshold where even if you're buying residential properties, like I think we talked about that last time, like 2-3 units, but you're a commercial client, so you then have to go do commercial financing. You don't need to incorporate. You can do commercial financing in your personal name.
Right.
Okay.
Right. You may choose to, but incorporate, but you don't have to.
Yeah.
So that's number one. So at that point, so the differences would be larger down payments.
Yeah.
So typically 25%. We've done 20 on a smaller, like a 3 or 4 unit.
Yeah.
With commercial, but 25 is like the general rule.
Should have the expectation going into it that 25 is your number.
That's right. Rates are a bit higher, so that's another piece of the puzzle. Like something today, a residential mortgage somewhere, like 2% range, depending on what you do, or even lower if it's a variable.
Yeah.
But then a commercial one, like upper 3s to like low 4s for something small like this.
Yeah.
You can get cheaper commercial rates on like bigger buildings, but something like this that we're talking about, probably in that range. So higher rate, fees. So commercial financing has fees associated with it.
Yeah.
Whereas residential doesn't, right? So
The amortization's the same?
25 years, you can't get a 30.
Can't get a 30. Yeah, like residential, you can get a 30.
Yeah.
So by the time you increase the rate and you shorten the amortization, the difference
The
is
cash
pretty
flow.
significant.
It's noticeable.
Well, and that's what happened with that property you were talking about earlier, because it was 5 units, so it had to go commercial.
Yeah.
And so as a result, like bit of a higher rate, nothing crazy. Okay, lose 5 years on the amortization.
Yeah, man.
Nothing crazy. Suddenly,
Together.
it's not so exciting.
Yeah.
So those are the main difference. So slightly higher rates, slightly higher down payments, and a couple extra costs. Also, if it's truly a commercial property, the appraisals suddenly cost like 10 times more.
And take 10 times longer.
That's right. Yeah. Legal fees are higher because the lawyer has to do way more work for the bank. So just everything becomes
Might be a
more
requirement for an
expensive.
environmental assessment.
Yeah, I mean, if it's like a 3 or 4 unit, then
Probably
then
not.
no. But but if you get into something bigger, or there's a gas station next door, or there's reason to suspect that we want to make sure there's no environmental issue.
Yeah.
Then that can come
Have
up.
you seen requirement for engineering reports much or?
No.
You
No.
mentioned that before. Someone else was mentioning that. I'm like, I've never had that.
Yeah,
ever.
recently I've been getting engineering reports on the buildings. Again, this was a new lender, new to
Yeah, that's
Atlantic
right, you were
Canada,
saying,
and they're
yeah.
coming out of Ontario.
Yeah.
And so I don't know if they're just trying to cover their bases because they're unsure, like, if they're not used to lending on buildings that are basically 100 years old.
Right.
Yeah.
Yeah, that's very possible.
If they're out west, then that could very well be the case.
We've
Yeah.
noticed that too. Like for example, with lenders that are, Ontario. I mean, they're all Ontario based. Like every bank is headquartered in Toronto.
Yeah.
Even Scotiabank.
True.
Bank of Nova Scotia. But some that are like more so, not necessarily new, but like newer here.
Yeah.
We have one bank that every time we've addressed this with them. I think finally now, but every time there's an oil tank, they think that's crazy.
Yeah.
Because in Ontario, no one has oil
No one
tanks.
yeah.
So when clients get insurance, they want the insurance company, or they used to ask us every time to provide, like, the insurance company has to specifically in the outline, in the coverage letter, yes, the oil tank is covered.
Yeah.
And they won't do that. Like, they won't make those changes. But, it's like they know there's an oil tank, they've provided insurance, it's covered. It's not a big deal here. But
Yeah,
they were
right.
like, we want to make sure that they're doing the coverage. It's like,
Yeah.
But to them, they think an oil tank is this crazy anomaly.
Yeah.
Um,
I mean, the obvious question with like switching to commercial, then it's like, well, why would you incorporate? I guess I should say, not switching to commercial. And I find some people are so keen to incorporate, and other people are like, well, want to incorporate, or when should I incorporate?
I think people are keen to incorporate a lot of the time because they watch the YouTube video and it sounds cool.
It
sounds so
sounds
cool.
cool.
It sounds so cool.
1,000%.
And that's and there's a lot of stuff with financing that sounds cool. I'll incorporate, get a private lender. It's like, hang on, do you need to do any of this?
yeah.
Sounds cool.
I get the question.
You
all the-
incorporate when you need to, or when it's like a lateral move, and as a result, there are some tax and liability benefits to being incorporated.
Emphasis
when
on
you incorporate it.
liability. I think that's like the
Yeah.
big one for a lot of people.
I think there's another one, so liability.
Yeah.
The other is depending on how you earn your income.
True.
If you are
Transferring the funds.
incorporated,
Yeah.
right, and then like in your business, and that's where you keep your money. Any money you then take out as John Smith from your business is income.
Yeah.
You
Yeah.
have to pay tax on it. So if you're pulling down payments from your corp, your tax bill is going to
Mm-hmm.
get crazy fast. And so instead, if you can then incorporate and keep it between the corps, like there's tax efficiency.
I
there.
had this issue because we incorporate for what we do on resale, and I bought this property in a personal name, so I was doing all these renovations to property, and I'd be pulling money out of my corp,
Right.
and basically paying 50% income tax on it to do this. So I was working like, I was buying $2 worth of stuff or 80 cents worth of stuff for $2.
Right.
And it's like, okay, I need to get a little bit smarter with that. But there's also the component, and a lot of flippers don't really like the whole flipping thing. In HST is an interesting little world as
Right.
well. And what are
Depends
you
what
doing with
accountant
these
you ask,
properties?
and- yeah.
And at some point, then if you're buying commercial, like i.e. retail, industrial, whatever, you're going to have an HST component to some of these properties. In order to have you have to have an HST number, and if you're registering an HST number, you might as well incorporate and have a corporation that is HST registered, because you're going to encounter all those issues. But for flipping,
down
that's a
a
thing
deep dive
that's
here.
even if you're going short-term rentals,
Yeah.
like
That's a very gray area. Short-term rentals, how
Is
that's
it ever?
income's being handled. Also, now that you said that, like, I mean, I don't know if you've seen this, but on the mortgage side, I had a client who was short-term renting a good majority. I think he had like an 8-unit, and I think 5 or 6 of the units were Airbnb'd.
Mm-hmm.
And what he did is he actually leased it to an Airbnb company. So
Right.
he still had
Mm-hmm.
standardized leases with this company, and then they went ahead and Airbnb'd it. So all was fine. And then the bank asked for an updated lease package. And when he sent it in, they came back. They had looked up the company that was signed on the lease, and they looked them up. They said, you can't do short-term rental as per our mortgage. If you look in the mortgage, you're unable
interesting,
to do
interesting,
short-term rental.
interesting.
I think it was over a certain percentage, maybe like 20% of the building.
Right.
And so he ended up having to actually basically evict that tenant, even though they were good and it kind of gave some stability. They didn't allow him to do that. And their thing was obviously the fact that it can go up and down so much. It's so volatile,
yeah.
especially right now. And then additionally, there's going to be tax implications based on how his property was zoned, where it's residential units. But technically, short-term rentals
commercial use
is a
in the
commercial
residential
use.
area. Yeah, I know that's a big
Right.
gray area, and we are not accountants. Seek independent accounting advice. But
On the residential side, though, have you been seeing that on the mortgages?
So my thought is if it's a rental property, this is my
Yeah.
personal opinion, not as a mortgage professional.
Yeah.
With a mortgage, or with a property, if it's a rental property, how I rent it is my problem.
Yep.
Obviously, there's lots of bodies that disagree with that mentality. That's my mentality for a lot of things. Is basically leave me the hell alone.
Yeah.
But that's a different conversation altogether.
Yeah.
So my point is, like, people do short-term rentals. Lots of people do. People flip-flop between the two, right? Some
Yeah.
people
Yeah.
do it, in the summer, and then they rent to a professional student who's here for the rest of the year. People rent, their cottage out the weeks they're not using it, right? Like,
Yep.
how do you classify all those things?
Yep.
Now, banks don't like it.
Yeah.
They aren't comfortable with it. It's not guaranteed. Like if you have a lease for $1,000 a month, that's a guaranteed income source. What's the guaranteed short-term rent?
Yeah.
So that's why they don't want to account for it, right?
Yeah.
Are there still ways to try to do that to some degree? There are, but they don't like it.
Also, on like a property like a hotel, let's say, or a motel, they wouldn't lend at
Holiday Inn.
The Holiday Inn.
hotel.
Yeah,
Holiday Inn.
yeah. They wouldn't lend at 75%
No, no,
LTV.
no.
They wouldn't give you a loan that high. It would only be
'cause
maybe
banks
60,
hate
65.
hospitality. Like if you get
Yeah.
into like if you're going commercial, like it's not like a 2-unit that you might Airbnb or something.
Yeah.
If you're going commercial with like pure hospitality industry, that's not something they're excited
They're
about.
not keen
ever.
on that. Yeah.
No.
And I think with the
Same like-
smaller scale stuff, they probably put less scrutiny on it. Like that's someone who was up for an annual review. right?
Yeah, exactly. That was a little bit larger building.
It's quite odd that they asked for updated leases as opposed to just lease amounts, like a rent roll.
Yeah, usually they charge for a rent roll.
That they probably put the name on the rent roll, and that's
Right.
what alerted someone. And I think there's an element, and I may be wrong with this, of like the bank, like don't ask, don't tell. Like they don't want to know about it to a certain degree. But now I think they're holding. I think they're looking at their exposure right now in the market on some of these loans that are getting pretty big, and they're maybe putting a bit more scrutiny into it.
Yeah, I think in general there's more scrutiny. Again, would you agree that you're seeing that on your side? I feel like things have gotten a little bit more intense with what they're looking through and
Yeah.
expecting out of you.
That's been the case for a long time. Like every year, it just gets tighter in terms of the requirements, like what banks want, just as far as proof of everything, and it feels like overkill. But the other thing that we don't have here in Atlantic Canada as much, that is rampant in other places, is fraud, like mortgage fraud.
Yeah.
And I'm not talking like, do people say they're going to live in a property and then they don't move in? Like, I'm sure that happens. But I'm talking like in Ontario, there's companies, like you go, like there's people that will say, give me, $5,000 and your mortgage will be approved because they fake all your income documents for you.
Right.
Like that is fraud to the
I've heard that is
the craziest
very
degree.
rampant.
It's huge up there. So when we here go like, why do you need another pay stub? Why? Oh, it's so annoying.
Yeah.
It's because someone else ruined it for everybody.
Right.
Right. And so the banks aren't gonna view things differently.
The big one is the down payment now. You're like, oh, my down payment's here. It's like, well, where'd it come from? Well, it came from
Right.
this account. Well, show me 6 months from that account. Like, well, that came from over here. Well, then show me a few months.
Yeah,
Like
and
it is.
we got to dig
layers
on that
layers.
always. So the standard rule is in 3-month history, but people move money from one account to another, and then they had this thing, and then they got a tax refund, and then they had $5,000 in cash, and like that can get pretty confusing. Perfect scenario is just sitting there accumulating interest, but that's not common.
No,
right?
nobody just holds on to their massive amount of money.
Maybe first time buyers like that they're just saving up towards that, but it can get tough, and then sometimes there's money coming from overseas, and then you need those bank statements. Oh, they're not in English. Oh, like it can be quite a thing.
Right.
I'm just going to point back to old fear-mongering Neal here. 2008, they were giving out mortgages in the States.
The ninja mortgages.
Yeah. People weren't truly approved for those
Yeah.
things, and they were just approving everybody.
What was it? No income.
No
now-
income, no job or assets.
Oh, I thought it was no income, no job approved.
No,
But like that's kind of what they were doing.
both works.
Yeah.
So now we're doing ninja mortgages in Canada. We're not doing them on purpose. Well, someone's doing them on purpose, but there's a lot of it going on underneath the table that is slightly concerning. Again, just gonna go ahead and keep throwing out my points.
I mean, here, like
my case.
it's not as big of a deal in Atlantic Canada.
No.
I think it partially has to do with prices and population. Like people are
time.
way more desperate to buy a house in Ontario.
That's true.
because it's unattainable, I guess, otherwise, or so they feel. So they go to these crazy extreme lengths. Whereas here, people don't jump to that.
3 years ago, I'd never heard of it like going on at all. I will say this year I've had multiple clients ask and make the offer. Clients be like, I can offer you this much money if you can get me in. And I'm like, I don't write mortgages, but
But I'll take your money. I mean, that's not to say there was never any issues here, because I know for a while there was stuff, but that was more to do with really aggressive
Appraisals. And
aggressive appraisals, aggressive takebacks, cash back on closing, and all this stuff, which you still hear about, but there's a right way to do it and a wrong way to do it. I mean, we don't have time to delve into all of these things. As usual, we've kind of gone long here.
Yeah.
But the VTB market is one of the things that's better about commercial financing,
Right.
is you can get into those things above board where the vendor holds the second mortgage. And we talked a little bit about that before.
Yeah.
But it makes a big difference. What are you seeing? Like, what's the most aggressive, though, that a lender is going to do with a vendor takeback?
I mean, it depends. Like typically, the rule of thumb, and obviously there's exceptions to this, that they want you to have some skin in the game, right?
Yeah.
But it also depends on the lender. So are we talking about a bank or are we talking about a private lender?
Well, that's the
right?
thing. If you want Neal's double-digit interest
Sure.
rates, like you can get them, right? Like, I'm just
But that it's
Shots
fair
get
though.
fired.
So like if you're going to go to a bank, they're going to be okay with a VTB. VTB is a vendor takeback where the seller holds a second mortgage on top of the bank's mortgage.
Yeah.
And you can get creative with those too. Like for example, so part of the reason the bank wants to know about it is because A, they want to know what are you contributing, but B, they want to know the repayment terms. So if there's a payment which there would be,
Associated with the
right,
VTB,
well
then-
then that impacts the cash flow in the building, which then impacts how much money the bank might be willing to lend you for their primary mortgage.
Yeah.
But can you get creative with a VTB where the interest accrues? So
Right.
then there is no payment.
Right.
Now, most of the time the seller's going to want a payment, but like
Yeah.
just it's a thought. So like you can just get more creative with it, and so the more like the stronger the picture, the more the cash flow, the more a bank will want to see, or sorry, the more the bank will be willing to allow for a VTB.
Yeah.
But they're still going to want to see something from you, right?
Yeah.
And this is the other thing about commercial.
And usually, like just before you get into like asking for like a special thing, it's usually like matched, right? So if the VTB's 10 or 15, they want you to have 10 or 15.
Yeah.
You always have to have skin in the game. You can't just do 100%.
Unless you get into then private financing. So if you can arrange a scenario where a private lender who will do like things in a lot more flexible ways, they just go on like that makes sense kind of basis.
That's a conversation topic at that point. There's no longer, let's say, a set rules.
Yeah, there's no criteria.
It's if you can sell the pitch,
Then you're pitching a product.
you're in. But then
Yeah.
you're also, your pitch is returned with like a 10+% interest rate.
Yeah, it's expensive, but if it accomplishes the greater goal, then that's okay.
Yeah,
Yeah.
and people have to. This is why commercial financing has the fees. Like I find a lot of mortgage brokers, the same as like agents when they're representing buyers, they run around there saying like, "And you don't have to pay me a dime."
Right.
The seller pays me, or the bank pays me, or like I don't get paid until you're blah blah. Blah. With commercial financing, you're paying a fee.
Yeah.
Because putting these things together is a nightmare in a lot of cases. And it is in the pitch, it is in the presentation, the packaging, and there's a lot of legwork that goes into it. So you will pay a fee. So even if you have this romantic notion of like, I'm going to get in with zero money down, it's like, no, you're not, because you're going to have to at least pay the fee.
Yeah, and and then again, your appraisal is a few $1,000s, your legal fees, like there's going to be costs.
Yeah.
Right?
You typically will pay a broker fee,
Yep.
a lender fee,
Yep.
the lender's lawyers,
The lender's lawyer, yeah.
your lawyer, your appraisal, which would be a few $1,000.
Environmental. if
Enviro
applicable.
if it's over 6 units on average.
Yeah,
Six,
or-
eight.
Airplane
or
ticket
the
for
amount.
the property
Yeah.
manager to fly
Right.
in.
Yeah, your plane ticket for
Per
car
diems,
manager
per diems, yeah.
It's per diem, so you can eat at the steakhouse every night.
Yeah.
And then so he can drive back his new car. But yeah, in all seriousness, like you'll pay just in fees and everything like that, 3.5% of your purchase price can be
Right.
easily, if
and
not
then-
more, depending
and
on
then
obviously-
don't forget your D transfer, because like that's the same 1.5% of a much bigger number.
Yeah.
Right.
So before this is all just sunken cost, 5% of whatever you're looking at. So if you're looking at $1 million place, $50K that goes towards nothing that you
And-
actually physically
And
receive
if
or
you're
are
doing,
paying down.
if you're doing private financing, then the fees are higher.
And
Yeah.
yes, there's commitment fees, etc.
What's like a typical fee right now for a private loan?
I mean, it
You
depends.
looked right at me like really quickly.
I looked at both of you in fairness. No, but like what? Because it's like 5%.
I mean,
2%?
like some are
two.
still out
Two?
there
Yeah, okay.
asking for 10, which is absurd.
It's
And
a
then-
fee?
Yeah, but like not for like a larger commercial loan, but
a small
that's-
bridge
that's
loan on
like
something.
short-term.
Yeah.
still out
Yeah,
there.
yeah.
But
Yeah.
then like a few percent. It depends. Like
Yeah. So if you want to borrow like $400,000, it's like, all right, they're going to charge you 4 points or something like that.
Yeah.
Just to borrow it. Like, so that's your 16,000, and then they're going to charge you 12% interest rate, give or take.
that's
Your
right.
effectives come out to like 17-18% interest usually.
Yeah.
That's right.
Yeah.
Yeah.
Right on.
And then with the private lender too, some of them will commit you to a term. Some, they'll charge you that annual fee, but then you can get out as soon as you can, and then you're only paying like that month's like 1% a month basically with no penalty.
That's the biggest thing I would say to watch out on. My biggest mistake with privates. Like I'm a big advocate for privates because they can allow you to get somewhere that you couldn't otherwise get. Obviously, budgeting with it and understanding that you can make those payments first before getting into it. But is the terms. I was overconfident in my terms. Plus, also, COVID hit right in the middle of me having a certain large draw from these companies and private lenders. And so it screwed all my timelines up. Having to go back and re-renew private
saying,
money,
yeah.
that's where
Because
they
they'll
get
charge you
you.
another fee.
It's like,
Yeah.
it's a whole new mortgage, even though I'm already keeping the money that you've given me. They're like, I'll just charge you another 4% while we're here.
And they
Yeah.
might be like, and you know what? I noticed you have this other property over here.
Yeah.
I want to cross collateralize because you're clearly not hitting your timelines and things like that. So
Yeah.
then you maybe can't refinance a property over here until this gets sorted out.
It's a slippery slope.
The
Yeah.
other thing with private mortgages is you have to understand kind of what the setup of the company is. So like, is it a lender that's lending their own money, right?
Yeah.
That they've raised, or is it like a lender that just is kind of like connecting you with almost like individuals that are lending money through
Yeah.
their RSPs or what have you? Like you want to know what
the
the
breakdown
setup is. Yeah.
Yeah.
Yeah. We're running a little bit along on time here. And I know the previous time we had you on, we asked you this question about what success meant to you. But I was more interested because you're in this space in the role that you have rental properties. You obviously handle residential mortgages. You also handle a lot of commercial mortgages. You're in this space and you're seeing this changing climate. And I know we talked a little bit about our episode where We discussed capitalism, and that got a lot of traction as well.
Yeah.
I made some sort of comment about we were talking
We
about
both made comments that were
is capitalism being vilified and are more maybe socialist, which is relatively moderate, or communist, more extreme leanings in some areas of our political life, or not that's true if we're seeing it, or maybe it's just our imagination. As someone who's in this space, like, what are you hearing from your investors and your clients, and maybe like the perspective of someone who deals with a lot of people from out of the country, with what, how you feel our entrepreneurial environment is right now, right? Because you deal with a lot of people who are entrepreneurs, investors, all these things. What are you seeing?
Yeah, I mean, I think it's important to remember that, like, well, my sample size of people might be a bit skewed, right? Because like, we're to be fair, like, we're dealing with people buying homes. There are many people who can't afford to buy homes.
Yeah.
But like, I'm not talking to them every day because that's
true.
just
Yeah.
not on purpose. It's just not what I do for a living. So it might be a skewed sample size, but people are still trying to buy homes. People are still trying to invest in real estate. People are trying to get their businesses started, open second locations, whatever it is, right? And so people are still striving to do these things. And so, like, what's vilified? So I think about this stuff a lot personally. And I think I should mention I was born in the USSR.
Yeah.
Right?
Yeah.
Like, I was born in a communist country. And then
Good times?
No.
Okay.
Terrible.
Yeah.
Right? So, like, this is, like, right now, you go on Instagram, you see, like, yes, I know the wealth gap is growing, right?
Yeah.
And so that makes people more upset and angry and like, rightfully so. That all makes sense.
Yeah.
But then going after the low end of the people who I think are striving and succeeding and doing something, like, that's the wrong people to target. But they're a lot easier to touch than the, like,
100%. The top
you know-
0.01% is incubated by all these layers.
Oh, it's impossible to yell at them, right?
yeah,
So like, they don't care about what you wrote on Twitter. But so there is a lot more. You look at, like, memes and like sentiments, and people are like, there's way more stuff online of praising, like, socialism or even communism, right?
Yeah.
And like, I'm not, like, I took first year poli-sci in university. Like, I'm not talking here about political theory. But what I can say is that a lot of people are moving here, as in Canada / Halifax,
Yeah.
from somewhere else. There's a reason for that.
Yeah.
Right? Like I think perspective is important, and it's not to say that just because it's worse somewhere else, we should just be like, fine, we're good here. But I don't know, like people are saying, like, vilifying what, like, the ability to make money, the ability to to pursue something. Like, I remember standing, like, seeing people and as a kid standing in line at stores, like grocery stores, in, like, back home when I was a kid, because so stores were empty, like, literally there was nothing on the shelves.
Yeah.
And then people would hear that, like, this store has something, and they'd line up to get it, and then people would see a line form, and they'd get in the line.
Top in line. Yeah.
You don't even know what you're in line for. It could be bread, could be a shirt. You don't know,
Yeah.
right? And, like, there's communism for you. So like, let's just
Yeah.
Yeah,
Like,
it's
have
tricky.
some
I mean,
respect for what we have.
Yeah,
the
like,
system we were working on.
it's-
It's not perfect, but
I know, and I guess like the tricky thing is just like you said, the maybe the worst actors, the people who are really creating the worst of this gap, are so incubated against criticism because there's, like, not only a physical and economic divide, but there's a political gap that they're protected by, and then just a technological, like, they borderline exist
like,
on a different
you
realm.
can't reach them.
You
They
cannot-
might as well
you
be
cannot
in the metaverse, right?
So
Like,
they get
on their
angry.
yacht, you know?
Yeah. So they get angry at maybe.
the version of that they perceive they can see in their day-to-day life.
Right, that's very
And, like,
interesting. I never thought really about that.
And that's frustrating, and, like, not like, a lot of people, again, move here to what, like, to better their life in some way. Well, sorry, but, like, that involves making money.
Yeah.
So people move here because they think they have the opportunity to do whatever it is they
Yeah,
want to do.
and they are not
or-
a fan of the taxes.
right,
No.
but yet they're still here. So it's kind of like, so we're vilifying all that while people move here to try to get a little piece of that.
yeah.
So
Yeah.
so I think that's just the perspective that, like, I'm not saying it's all good, and just because it's worse somewhere else, we should be dismissive of the inequalities and
Yeah.
Maybe some appreciation for what the system is.
Well,
Yeah.
it's so hard. Everyone says, everyone's like, oh, it's such a shame because the American dream is dead, right? A lot of people are like, oh, this generation, the American dream is dead. It's like, and then someone like goes about trying to achieve the American dream,
Let's
and
squish 'em.
then they maybe aren't well received.
Yeah.
Right.
It's like, so I don't know. I've just viewed it as contradiction, and I know because you're so in the space and you deal with a lot of people who are new to the country. I was just curious to see what your thoughts were.
Well,
on that.
and then where's the tipping point too? Like at what point it's like, oh, good for you, good for you. Oh no,
No, how dare you.
Yeah, you know,
Yeah.
like there's so many like what's that like a logical fallacy or you know like what point does it stop making sense?
Yeah.
And like
The shiny car.
is the system like is it the whole system like should we debate capitalism? It's like, well, I don't want to, and not,
Yeah,
and not
yeah.
because
Like,
like I'm benefiting from it, and granted I am. I just mean because I think it's a futile pursuit.
Yeah.
Like we can debate it all day long.
Yeah.
Yeah, it ain't changing.
No.
But,
And-
okay, we really should probably wrap. Neil, I think you've
Yes.
got maybe a thought to wrap us up on there, or are you just stretching?
No, I did have a thought, but I'm not going to go down that path. But in general, I think there needs to be an appreciation for what we have here and what we've gotten to, just with a lot of different items. So
Yeah.
I respect what you said there, Igor, and it's interesting for someone who's come from what you've come from to now see this. That was like a perfect little thing where it's like, and you see people waiting in line. They don't even know why they're getting in line. They're getting in line.
Yeah.
And even just the fact that that's how you have to live because the systems clearly aren't working and they're quite a bit worse than what we wait in line here because we're like excessive consumption,
Right. Oh,
not
yeah,
because
totally.
we
There was
are like,
nothing.
I
Well,
haven't
we
had
took-
bread in 6 months.
Yeah.
Yeah, we started by talking about
You know, and that
Black
was a long
Friday
time
sales.
ago, but you know, it's just a good example to underline like, well, you go too far with it that way.
Yeah.
And it's also a very corrupt system from just because you have a small amount of people holding all the cards like that.
Yeah, which is what people argue against in capitalism. We don't like a small
Right.
number of people holding all the cards. But
Yeah.
okay, we do really have to wrap
Yeah,
up. We're gonna have a couple more episodes before Christmas. Really
Yeah.
excited about the content coming up. We're gonna do a year in review. We're gonna have another guest, and we're gonna talk about some more stuff. But for now, Igor Geshelin,
Neal and Andreino.
Chandler, Master Keys, Tanner, B&V behind.
Thanks for listening, guys.
All right.
Yeah.
See you next time.
See you next time. Thanks for listening, guys. Check us out wherever you listen to your podcast. Rate and review our podcast on Apple and let us know what you think of the podcast in the comment section. And check us out on TikTok and Instagram at Master Keys Podcast.
When I was broke, I had rich habits. When I was broke, I had rich habits.